Good afternoon, everybody, and welcome to this online discussion. My name is Alexandra Tracy. I'm the chairman of the Financial Services Research Group, or FSRG, and I'm delighted to welcome you today to this discussion, Decarbonising Asia, Innovation, Investment and Opportunities. Now, my heart does somewhat sink at the idea of another online discussion instead of seeing each other in real life. But what it does mean is that we could be joined by three wonderful panelists who can't be here physically with me in Hong Kong today. Tony Verb, Eric Chong, and Moon Kim, two of whom are in Singapore at the moment and one who's in Seoul, but we're all very happily together on the screen. A very brief word about FSRG. We were set up in 2021 to support the development of Hong Kong's financial markets and to accelerate Hong Kong's leadership in the rapidly evolving areas of green finance, global asset management, and virtual assets. We're an independent entity which draws on the experience of the local business and financial communities, international best practice, and a deep understanding of global trends to support our work. And if you'd like to learn any more, please have a look at our website at fsrghk.com. Now, today we are very pleased to be co-hosting this event with our partner, the Commonwealth Chamber of Commerce of Hong Kong. I'd like to thank them very much and to invite Julia Charlton to say a few words.
Thank you so much, Alexandra. Well, we're also very excited to be co-hosting this with FSRG. It's a wonderful initiative and we're all really looking forward to it. So welcome everyone who's signed in from Asia and anywhere else in the world they are. Thank you very much for joining us. And I think that Hong Kong is at a rather crucial time, and it's probably quite a time-sensitive discussion to have Asia's role in significantly lowering carbon emissions. Quite literally, Asia's actions will be felt across the globe, and if we hope for it to be a change for the better, the region has to become a front runner in terms of mitigating carbon footprint and has to champion green initiatives, green finance frameworks, and integration of sustainability clauses wherever possible, particularly in terms of international and regional trade. And I think we should also acknowledge that some countries are more accountable than others. Two of the largest emitters of carbon are bigger and more advanced economies than the smaller economies that are amongst the lower contributors of carbon emissions, including Commonwealth countries, which is, of course, a subject dear to our hearts, like Fiji, Tuvalu, and Nauru. Tonga, for example, must spend at least $67 million a year for climate adaptation for 10 years, according to an IMF report, roughly translating to about 15% of its GDP. Whereas the IMF also reports that on average, economies have to spend 3% of their GDP on public investment to adopt sustainable measures and policies. The fact that the carbon cost of GDP in Asia is almost 4 times higher than that of the 4 largest economies in Europe isn't lost to us in Asia. And while no price can be put on initiatives to save our planet, the asymmetry in responsibility and capability must be called out and questioned. And I'm pleased to see that this is becoming a more prominent part of the discussion. And I'm sure that that will be part of the discussion today. So the book to be discussed, which is very exciting during this webinar, contains even more significant factors, data and observations that are critical for our understanding of the exact blueprint Asian economies require to pave the way forward towards a sustainable and bright future. And I'm very much looking forward to hearing not only the way we can tackle the challenges, but also about the fascinating and unexpected opportunities that arise from the challenges of climate change, allowing us some bright spark of hope, which may be what we just need at the time. So Alexandra, thank you very much for involving us, and back to you.
Thank you, Julia. So to the topic of today, and thank you for introducing it so ably. Decarbonising Asia is an important new book which explores these issues. Decarbonisation, innovation and technology across Asia, highlighting initiatives by government, industry and the finance sector to reduce emissions. Our wonderful panelists today are 3 of the book's co-authors, and we have some big topics to discuss, both around the findings of the book itself, but also to get their expert views on Asia's future development trajectories. Now, I'd like to try and make this as free-flowing as possible, even though we're on the screen. So all of you out there in the atmosphere, please do ask questions if you like by typing into the question box, and we'll address them as we go through the discussion. We've got nearly an hour, but please don't wait to the end. Do get your questions and your comments in and be as challenging and as provocative as you like. So I'd like to start now by asking each panelist briefly to introduce themselves and to give us maybe one sentence worth about why decarbonisation is such a topic of importance to them. Let's start with Tony.
Thank you very much, and thank you for the Commonwealth Chamber of Commerce for having us, and Alexandra for putting this panel together, and for all the 19 attendees present and listening to us on this Tuesday afternoon. It's a pleasure to be here. My name is Tony Verb, the co-founder of Carbonless Asia, which is an innovation and investment platform that ultimately is fully dedicated to decarbonizing Asia. And I've had the pleasure to co-author, co-edit this book with some amazing people, some of whom are on this call today. But altogether, the book has been a collaborative effort between 15 or more than 15 domain experts. And my co-editor, Roman Shemakov, is also on the call today as an attendee, because we couldn't fit everyone on the panel today, unfortunately. But it's great to have so many great people in attendance, and ultimately what Carbonless stands for is unlocking the opportunities in this decarbonization process, and most importantly to channel capital into into those opportunities. But we can talk about all those a little bit later, a little bit more. Thank you again.
Great. Let's go to Seoul and Moon.
Okay, hi. I was trained as an environmental engineer and transitioned into finance, first with a Boston VC firm investing in what was back then called energy technology, and then later Silicon Valley VC firm at the start of Cleantech 1.0 back in 2006. And that was followed by a Hong Kong-based role to make growth equity investments in sustainable companies in Asia Pacific. And now I focus on climate tech opportunities addressing both mitigation and adaptation, with global potential as a transaction advisor to funds as well as companies. In terms of why decarbonization in Asia is important to me, I mean, just looking at what I just said, I'm a career sustainability specialist, and sort of this is kind of like the main tenure of what I care about. And just generally speaking, I think climate change and decarbonization is literally existential challenge of our time. So I'll leave it there.
Thank you very much, Moon. And now back to Singapore and Eric Chong.
Hey, Alex, pleasure to be here. Well, I mean, it's a pleasure to be a co-author of one of the chapters in Tony's book, talking about innovation and decarbonization, two topics very dear to my heart. I mean, I spent more than 30 years with Siemens, so, it was a technology company, and I could see at first hand how innovation could help in this big threat that we have in terms of climate change. So as a human being, I'm very concerned with the changes happening in our climate, extreme heat and so on. And as a businessman, I was sort of intrigued and very positively motivated by the opportunities presented in this great transition we are going to undergo towards low carbon economy. So again, pleasure to be here.
Thank you, Eric. Now, Tony, you are really the architect of the book project. So could you start by giving us your overview of how it all came together, why you did it, and what you were really seeking to achieve through the book?
Thank you, Alex. And if I'm not mistaken, we have yes, I'm not mistaken. We have a short presentation, everyone, just to make it a bit more colorful, not boring, because this is a very short presentation, but this is the book. So you see this exists, and this is the exact same presentation that we delivered at the book launch, the official book launch at COP27 in Sharm el-Sheikh about half a year ago. And that was also to give an understanding of the audience why we decided to write this book. The why is very simple. We were working on the carbonless investment thesis, and we're looking for information in the context of decarbonization, Asia, technology, and investment opportunities. And we actually didn't find any book that we could read. We didn't find information online that was catering to business people looking into this opportunity pool, if you will, and basically decided to just go for it. Now, how I personally went about this is how I like to do everything in life, surrounding myself by and with much smarter and great people, and all the people that you see on the book cover are much smarter and great people indeed. Some of them have been mentioned already before, but it's been an amazing collective production and just working experience. Now, if we go to the next slide, I can give you a highlight of the focus areas of the book. Most importantly, Asia Pacific, and under that terminology, we actually include both the Middle East and Australia and Oceania, but also all of Asia that is traditionally considered under the Asian definition. So if you imagine a triangle connecting Japan with Israel and then also to New Zealand, that is the triangle that we are covering within the book from a geographical perspective. We are also focusing on scalable technologies and scalable innovation, and I will share with you in a second why, and investment and capitalistic opportunities. Let's please go to the next slide, and thank you for the Commonwealth Chamber of Commerce friends to help with the slides here. So why Asia? There's a very simple reason for that. More than 50% of the world's CO2 emissions come from the region, and the fact that there was no book written about Asia in the context of opportunities and investment opportunities and where technology could be applied to contribute to decarbonization of the region was really surprising. So we felt we had to do this. There is no decarbonization globally if we are not decarbonizing Asia, full stop. So that's why we focus on Asia. Next slide, please. Why we are focusing on scalable technologies? Because 85% of the technologies, or more than 80% of the technologies that we need to hit the net zero targets of 2030 are already in existence. And if we don't hit those targets, then we will not hit the 2050 targets. So from our perspective, it is critical to identify those technologies that we don't need to invest 10 years to develop and validate, but we can just focus on scaling across borders, across industries to hit the targets we need to hit. So those are the technologies indeed that we were focusing on in the book as well. Next slide, please. The next slide, please, will be covering why capital. And why capital, why investment? Because ultimately we need capital to scale these technologies. We need capital to decarbonize these industries, but also the climate tech investment expectations, according to the World Resource Institute, account up to $26 trillion US. Now that's a need, but that's also an incredible capitalistic opportunity for those that are addressing it and going for it the right way. And this target is very much correlating and aligned with the 30 gigatons of CO2 emission removal target by 2030, which is in line with the UN sixth sector framework targets and projections. Next slide, please. And it is indeed the UN's sixth sector solution framework that we took as a basis for the book. We just reshuffled them a little bit. Here we see the UN's projections and calculations of what industry, what kind of carbon emission reduction is expected and desired in different industries. Next slide, please. So the book structure ended up being not only 6 sectors, but 9 sectors, and we bundled them in 3 different sections. The first section is labeled as humans, because ultimately we are talking about anthropogenic climate change, and humans are the reason why we are facing the kind of challenges we are, but also it will be humans solving those challenges. So we start with policy and finance, lifestyle and consumption, industry and waste in the first section. And the second one is dedicated to cities, because ultimately 75% of the world's CO2 emissions are related to cities. And within that bundle, we have energy, mobility, and the built environment chapters. And last but not least, we cover nature, because it's ultimately about the nature. And under the nature section, we see wood and agriculture, forestry and oceans, and sequestration as separate chapters. Next slide, please. And all chapters are highly modular and very similar in terms of their structures. We wanted to make sure that it was easy to write for our contributors, because the book has been written amongst 15 different people, and we wanted to make sure it was a good experience also for the readers to get used to one particular structure and make sense across the different industries. So we always start with an industry analysis, and within that we also have a past, present, future outlook to understand in an Asian context, Asian and decarbonization context, where that industry is coming from, where is it right now, and where are the trends pointing towards. We also look at case studies, one corporate and one startup case study. The corporate case study is standing to show what's happening right now, and the startup case study is designed to show what is expected in the future, what kind of innovative solutions we see in that particular industry. And we also have interviews in every single chapter with a policy maker, an investor, or a business leader. Next slide, please. And this is just to give you an idea of the kind of people and companies that we engaged and we featured in the book. We featured corporates from Asia like Geely, but also international companies that have a significant contribution and impact on the decarbonization of Asia, such as Unilever or HSBC. Startups from the region like All Infra, eTren. I'm actually in Bangkok right now, and eTren is a Bangkok-based electric mobility company, or Omni Foods, that are very familiar for our attendees from Hong Kong, and interviews with the Chief Sustainability Officer of Temasek, the Papua New Guinea Governor Gary Juffa, or MTR's CEO Jacob Camp. And these are just to give you an example or a color of the kind of content that you can expect from the book. Next slide, please. And this is my way to highlight how much this is not my book or the book of the 4 of us here on this call, but a book of 15 great people. So we were so many people contributing to this book that one slide was not enough to feature everyone. But you can find all the contributors online on the publisher's website, which I really recommend you to check out. So this is just the color before we jump into the conversation, and I thank you again for sharing the slides on my behalf. Thank you, Alex.
Great, thanks, Tony. That sets the scene really well, and I think it gives some idea of the level of expertise and the quality of the work that went into this book. I think we're all very proud of it. I'd like to ask Eric first. Now, you wrote the chapter about the built environment, cities in Asia, absolutely critical. You were able to draw on, I'm sure, a lot of your experiences in this sector from your time at Siemens, as well as in additional work that you will have done for the chapter. Give us just a couple of the key messages that we should take away.
I think it's been, the thing about cities is that in the chapter, there are numbers such as 3% of land, but contribute 70% of energy use and accounting for 60% of greenhouse gas emissions. So enough said about that. I think the cities are definitely an important component in decarbonization, particularly in Asia. The mega cities where it is defined as with population of more than 20 million. Asia has the most, by the way. I think Asia also sort of has a big dilemma. Cities in Asia faces a big dilemma. This dilemma of this what we call the economic growth. How do you decouple the term is how do you decouple economic growth from energy use growth, from carbon growth, right? Because I have to say that cities in the developed economies have an easier way, because for them, maybe growing at a slower rate is good enough to sustain their population and meet aspirations of its residents. But in Asia, typically you see that growth rate of 6 to 8% in most countries and regions. So the issue is how do you decouple 6 to 8% growth rate from increased use of energy, increased use of space, increased use of biodiversity. And this is where the sustainable development comes in. In my chapter, I speak a bit about sustainable development because as defined by academics, sustainable development is development that meets the needs of the present without compromising the ability of the future generation to meet their needs. So very easy definition, but something that is easier said than done. If you speak to a mayor of a huge city in China, he or she will tell you, I'm sorry, I like that, but I have to meet the needs of generations today and I have to grow 6 to 8%. And I simply cannot afford to use less energy, translate less carbon. So I think this is a dilemma that cities in Asia face much more than cities in developed countries, I have to say.
Yeah, on the other side of that argument, people will say to you that something like 75% of the projected urban areas by 2050 haven't been built yet. So there's a real opportunity to sort of leapfrog and build cities that are more sustainable. Is that a possibility? Can emerging markets in Asia really approach that? Do they have the capacity and resources?
Alex, I like the way you use the word leapfrog, because indeed, on the other hand, cities in Asia have this benefit of not having legacy costs, right? I mean, if you are in Europe, you have a lot of legacy infrastructure, you have a lot of legacy policies that you can't change. Cities in Asia definitely have a benefit of that. In order to do that, there needs to be a mindset change for policymakers in Asia. One is that they have to recognize that resources are not limitless. There is a cost to energy, right? Carbon, there's a cost to carbon. Number two, they have to use more renewables, perhaps, because unfortunately, Asia is still the biggest user of fossil fuel energy. The third and most importantly is they have to think that there is a cost to biodiversity. In sustainability circles, there is a call that when we do accounting, we not only account for the resources in terms of financial terms, we have to account for impact on biodiversity, natural accounting. So I think this is where administrators and governments in Asia can do better, which is to really look at natural costs to development. That may indeed change some of the trajectory that we are seeing today in terms of, I have to say, uncontrolled development.
Yeah. All right, turning to Moon, you wrote about sequestration, carbon capture and storage, mean, this is highly technical. It's probably baffling to many of us out there, but incredibly important. Can you explain what it's really all about and what are the challenges and the opportunities?
Sure. I mean, in sort of the simplest terms, sequestration is about capturing carbon, whether it be from point sources, from industries, from smokestacks, power plants, etc., or direct from the air, right, the atmosphere, to transporting it and storing it somewhere. And the storage mechanism could be geological. I mean, that's the sort of the first wave or the first generation, or technological, right, like into a product, right, sort of like a durable form of carbon. So in a way, kind of locking the carbon in the atmosphere into a form that wouldn't escape back to the atmosphere. That's the whole idea. And now there's sort of like a two very different branch of sequestration. One is kind of, sort of the oil and gas favorite CCUS or CCS, carbon capture and storage. And that's more about the mitigation of their own emissions. So, their supply chain emissions, when the oil and gas products are eventually used, it ultimately emits the carbon dioxide gas. And then the point is to sort of recapture it right after the emission or like right before the emission so that they can sort of deduct that amount from their the carbon accounting. And then the other is broadly known as carbon dioxide removal, CDR. And it's either by technological means or by sort of natural, usually photosynthesis, you capture carbon dioxide from atmosphere. And then the kind of transport storage mechanism they're all sort of integrated and intertwined. So that's what it is. The challenges I see, it's mostly scale challenges because there are numerous technologies available out there. The challenges that I see are mostly twofold. One is technical, which is fairly well understood by the industry observers, which is basically the projects and deployments that are out there today are too small. So, for example, the largest ones that are being constructed or developed are only still up to low single-digit megaton per year scale, and they're also very too expensive for wide deployment, and it takes too long to deploy. So there are, again, a lot of solutions being developed, including but not limited to modularization, clusters or hubs, or just general learning curve by deploying more and larger projects, all working toward gigaton scale capture globally by next decade if you're talking about CCS, CCUS. But if you're focusing on CDR, then the gigaton scale capture probably would happen in the 2040s, if not a little bit later. There's actually more detailed discussion on this covered in my chapter, so I think this is where I plug the book. The second part of the challenge I see is actually less discussed, but as important. It's MRV, monitoring, reporting, and verification mechanisms, and constructional and or legal structures around ensuring durable carbon removal and storage on the orders of hundreds to thousands of years. And now the storage mechanisms are not created equal. So just looking at the geological storage alone, for example, basalt rocks quickly turn carbon dioxide gas into stone, but sedimentary rocks are inefficient or if not ineffective as such permanent storage media. So we need more standard setting around this, and also a practical way of MRV because nobody's going to monitor a project for hundreds and thousands of years, and that's just impractical. Did I answer all of your questions? I think there was sort of multi-part questions.
Yeah. No, that's a great introduction. So, I mean, given the scale of these projects, and as you say, they're expensive, they take a long time. Who's driving them in Asia? Is it governments? Is it business? Is it coalitions of the two?
All of the above. I mean, the big conglomerates or the big sort of oil and gas companies are doing it because they do have their own net zero goals. And so, for example, Sinopec was featured in my chapter as a case study. So So and then also there are a number of companies in the Middle East as well. They're all doing that. But again, even though they're sort of trying the technology to see sort of how it fits their business model, et cetera, the really successful cases are to date have been shown in North America, where government sort of jumps in with sort of tax incentives and also infrastructure sort of like help, right? It's like they're setting up the clusters so that the transport and the storage part also is easier. So it's not just the capture part, but then you have to eventually transport them and then store them and lock them away, right? So that's where the government is really helpful in terms of not only just the dollar amount of tax incentives, but also just kind of bringing the multiple players of industry together and then kind of helping them work together as a whole. So, and then that's not yet happening in Asia.
Right.
I mean, there are some clusters actually China is developing, but that's an exception more than the rule.
Okay. And then just one more follow-up. You wrote a little bit in your chapter about sequestering carbon in the soil, which is very interesting. Regenerative agriculture, which I can't even say, regenerative agriculture is getting a lot of attention nowadays. You've got companies like Walmart claiming to be very big in this area. What's the potential there?
Well, I mean, okay, so the potential could be, it kind of depends on who you ask, right? Because the proponents are sort of crazy about the opportunity and the potential of the regenerative agriculture. It's sort of like almost the be all end all solution when it comes to agriculture. So the potential can be huge, but as with all nature-based sequestration, MRV is a huge challenge, right? Because soil is a living environment, right? So and then depending kind of like the actual practice of agriculture and how long that actually sustains itself, and then sort of and whether the farmer actually sort of retains a farm or sells a farm to somebody else who discontinues it, etc. So there's a lot of complexities around that MRV, and also there's no really industry-wide standard for regenerative agriculture. The whole term started actually in the US by an organic farmer there, and then there are so many sort of practices that one can deploy, right? Starting from cover crop and not using chemical fertilizers to no tilling, and then also sort of beyond that, kind of incorporating agroforestry into the farmland, etc. So the depth of regenerative agriculture actually depends on the practitioner, right? So and then kind of how long and how durable the carbon storage also depends on like the practice itself, right? So we need a lot more standard setting with that, and then the industry kind of got ahead of itself because there were a lot of startups that kind of jumped to it, and well, not just startups, but also incumbent food industry companies, because this sort of like an easy way for them to kind of get on the bandwagon with financing mechanisms. So they kind of saw the carbon credit is a kind of a big upside opportunity with this, and then they sell the carbon credits, but then like 1 year later the practice stops, and then the carbon is re-released back into the atmosphere. So then who's gonna sort of pay for that? So there's a lot of complexities around this that hasn't been figured out yet. So some people are really gung-ho about it. Some people are a little more sanguine or kind of pessimist, or sort of they like to see sort of more development around it. So
Okay.
but but it's something that we all actually need to adapt eventually, because as Eric was saying, it's not just about carbon. Like regenerative agriculture without the carbon actually has a lot of benefits in terms of biodiversity, and sort of restoring the soil itself, so that the agricultural, long term, actually the farmer benefits regardless of carbon, because the soil health gets restored.
So you mentioned startups there. Let me ask Tony. You were the co-editor of the book. You read the entire thing. You looked at all of the case studies and the businesses and the technologies that were talked about. Which are the one or two that struck you as being the most interesting, or maybe the most surprising?
let me just start with two components about the book for everyone's reference on this webinar. What you will find in the book in terms of case studies, whether it's startup or corporates, or the examples that we give in various industries, is not meant to be comprehensive. These are just highlights, and not even highlights of the best performing companies out there, but a highlight of examples in certain geographies, in certain circumstances, and in certain times that we were actually exploring and examining these and researching these markets. Why do I find it important to say this before answering you, Alex? Because it was so hard actually putting this book together without covering even more companies and even more examples. We had to stay very disciplined. We only had one startup case study for each industry, but each industry is huge. Like if you just consider energy in Asia and the kind of technology innovation that's happening in that space, it's incredible. So we decided not to try to pick the best one, but somehow the best one that fit in the flow of that particular chapter. So I just need to highlight that the startups that I will also highlight right now are not the best startups from their industries and not the best startups from the book. They are just startups that are worth mentioning in the context of this conversation. And just bear in mind that originally this book was designed to be 250 pages long only, and it ended up being almost 400 pages long. So much was happening in Asia, right? So that's the prologue for my answer. Now, my answer will be in the context of this call accordingly, and I will highlight the two Hong Kong-based and Hong Kong-funded startups that were featured in the book, All Infra and Omni Foods. Now, Omni Foods, I think, doesn't require too much introduction for a mainly Hong Kong-based audience, but basically, that is a company that is the holding company and the mother company of Omni Pork, which is a famous Hong Kong food innovation, and is now scaling across not only Asia, but across the world. And that is a plant-based pork supplement built on the thesis and the insight, which I thought was always extremely smart, that the mainly US initiated and US based Beyond Meat and Impossible meat and burger type products were actually not solving the problem in an Asian context. Because there's very little beef consumed in Asian cuisines, and the main type of meat that's consumed across Asian cuisines, and specifically in China, is pork. And so this pork as substitute, plant-based pork substitute, was developed based on that insight. And there's a very good reason why it is actually scaling so fast, and it has a very good reviews and very good feedback from customers as well. The second startup couldn't be more different from in comparison, which is All Infra. It's a blockchain-based carbon trading and green financial services firm, and their claim to fame, beyond just being funded and co-funded in Hong Kong, was participating in Genesis 2, which was a project initiated by the Bank of International Settlements to issue the first tokenized green bond, and All Infra delivered that project in consortium with Goldman Sachs. And that project was also introduced and shared the results of at COP27. And it is a very important milestone, both for green bonds as a terminology, as a practice, and also for the Bank of International Settlements. So these are two Hong Kong-based startups, and we like to say that Hong Kong doesn't have green tech or decarbonization technology, innovation, talent, and projects, and even in our book, two made it as case studies. So there is, and we believe there's much more room for more, and we encourage everyone to keep their eyes open for these opportunities. And obviously, these are investment opportunities as well, as long as anyone gets in contact and gets presented these opportunities in time. So I will stop right there because I could go on and on and on regarding the great startups that were highlighted in the book, but also the great startups that were not highlighted in the book. And that's part of the takeaway of the book. So much is happening, both in Hong Kong and in Asia.
Yeah. Great, thanks, Tony. And let me just mention to everybody out there that there is a very interesting article about the tokenized green bond issued by the Hong Kong government recently on the FSRG website. So go and have a look.
Where else?
Guess who wrote that? So just sticking with Hong Kong for a little bit longer. Eric, as part of your chapter, you had a conversation with Carey Chan, Executive Director of the Hong Kong Green Building Council. What did you learn from him? Is Hong Kong doing enough?
Well, I mean, there's a bit of background for those who don't know Carey. Carey is actually a pioneer in green building. Started in 95. He was one of the, I have to say, co-founders of the Hong Kong Green Building Standard, which is the BEAM Plus, right? And so that's 25 years ago. But and since then he has gone on to become somebody that is an expert in the industry, and for that maybe 2 years ago he was appointed as the Asian chair of the World Green Building Council. And I think the Green Building Council, for those that are not so aware, basically represents sustainable buildings. It is comprised of industry experts and academics that basically gets together and promotes and pushes and work with government to deploy green buildings. I think Carey has a lot of foresight and vision. So one question I asked him was, so what are the trends, right? And that's important because what is the future of green buildings? And he's very positive, of course, representing green buildings. But his reasons are number one, his call to building owners are remember that you need to be aware of these trends. Number one is governments are committing to carbon neutrality. So if you are a developer or a company with a portfolio of buildings, guess what? Whether you like it or not, you have to reduce carbon. That's not even that's sort of a no-brainer. But more importantly, the second trend is that investors. So you have your portfolio managed very famous BlackRock, right? And then they are all looking at ESG risk in portfolio. So again, if you are a developer and you don't have green buildings in your portfolio, be careful because investors will tend to avoid you because they need that ESG, in the portfolio. Number three is, as Alex, you mentioned, guess what? There's money out there, right? Green bonds and so on. And that it is, in fact, when I was in Hong Kong, I remember 3-4 years ago, the first green bond was raised by, if I'm allowed to mention name, Swire, right? Now it is quite common. So green bonds are there and money is there in Hong Kong particularly. The last thing which I think Moon mentioned a bit is that there is also a shift from not only mitigation but to adaptation. So if you are a infrastructure owner, you not only, unfortunately, you not only have to look at about reducing carbon through operations, you also have to look at adaptability because it is quite clear that we are all too late in this 2050 game, I have to say, and that climate risk is already with us. If you are a developer of a building, you do have to consider climate risks that are already facing, your portfolio today. So I think these are very insightful trends that Carey identified. I mean, there's good news and bad news. The good news is there's risk. The bad news is that there's opportunities, there's money out there, and there is growing acceptance that green buildings are important to society.
Yeah, thank you. And let's go back to Moon. As you're sitting there in South Korea, what can you tell us about the dynamics in your market? Are there particular challenges for South Korea to get to net zero? And some of those large Korean companies, leaders of technology, are they able to make a contribution to the rest of the region?
Sure. So, I mean, first, unfortunately, I have to admit that South Korea is a laggard among OECD countries when it comes to decarbonization efforts. And most developed countries start their decarbonization journey with renewable energy deployment. But, Korea is a geographically tiny country that's 70% covered in mountain, and its coastal waters are deep. So that what that means is the country itself is actually quite resource poor when it comes to utility scale solar and wind deployment opportunities. But it's now slowly but surely developing floating offshore wind projects in the southeast coast, where the waters are deep. And that's more expensive than the more conventional wind projects onshore or sort of near shore projects. And further delaying those types of large scale renewable energy projects is inconsistent energy policy at the national level. And that gets whipsawed around every time the executive branch of government switches sides. But that's not unique to South Korea. Compounding that is this top-down patriarchal economic and educational systems that are not really encouraging or conducive to employee and student-led climate activism that actually have sort of elsewhere did a lot of work raising awareness among the general population. So unfortunately, in Korea, still there are too many people believing in false dichotomy that pits climate and environment against economy and labor. So those are the sort of very high level challenges, but it's not all doom and gloom. South Korea is an export driven economy, so the conglomerates that sort of dominate its economy have to comply with evolving international regulations, such as the EU's carbon border tariff that's coming up later this year. So and on top of that, they've also recently seemed to have start realizing that decarbonization could be actually a great economic opportunity for them, rather than just costly nuisance. So and the silver lining in all this is that Korean multinationals can move fast when they actually finally commit at the leadership level. So, for example, only a few years ago, Hyundai was just pretending to do something with their hydrogen passenger cars in their ad campaigns without actually having a viable product in the market. But today, Hyundai Kia are actually top selling EV brands globally. So that kind of sums up in terms of what could happen if Korea really just kind of put their foot on their accelerator.
Yeah. Tony, you've spent a lot of time trying to sort of encourage innovation, foster sort of startup and corporate ecosystems, encourage partnerships. I wonder if you could tell us a little bit about that.
In terms of the experience or the insight?
Oh, both.
Okay, so we are actually, as we speak, running an innovation program, innovation challenge with MTR, and that has been a very good experience. Once again, I'm staying in the Hong Kong bubble framework. It's been a great experience. It's one of the companies that we've been talking to over the past couple of years that has realized that decarbonization and sustainable transport and sustainable operations in this space is not a PR exercise, but it's an existential transition that the company needs to go through. And we see how from the very top, and obviously Jacob Kem was interviewed in the book, how from the very top to the entire company, this mission is actually translated to action. And obviously this is a long journey, long process, but we see that actually manifesting across the teams that we've been talking to, and it's been a very, very pleasant experience. Quite frankly, when we started the carbonless journey 3 years ago, there were no countries bar Bhutan with a net zero commitment, and obviously Bhutan is a really special case because it's carbon negative to start with, and obviously it's admirable that it is now in the constitution, written in the constitution, that they have to remain carbon negative, but no other country had any net zero ambitions or commitments. But that changed dramatically in 2020 fall, when China, Japan, South Korea, and Hong Kong were the first ones announcing their net zero targets and commitments, and now the list is extremely long, so long that I won't go into the list, not to bore everyone. But ultimately, we ended up with commitments that from Asia that cover about 40% of the world's CO2 emissions. So it's significant, coming from 0 to for more than 40% of the world's CO2 emissions now committed to transition towards net zero. Now, when we started having our conversations, we met with a lot of skepticism or neglect or just not resonating with business leaders, that what we were standing for was an actual opportunity and potentially an existential need for a company to go through as a process. For most companies, it was a nice to have or considered to be a CSR exercise. But over the past 3 years, I must say, there has been a significant turnaround. Practically, there's no company out there that doesn't consider their countries or their markets net zero commitments and what their industry, what transition their industry will go through, and what positioning and what action they need to take in order to benefit from this process and not to be left behind or just not die in the regulatory whirlpool and changing client and customer demands and expectations on this front. So the landscape changed dramatically ever since we started having these conversations, and now in different countries across Asia, we are actually raising an investment fund now. We are talking to big industrial potential investors. The reception is very different in every single market. In every single industry, we find at least one leader in each market that is taking net zero commitments and decarbonization seriously and taking it, considering it as an opportunity for them to grow and gain market share. So we are very excited with the reception, I must say.
So let's talk about money then to finish up with, since we've just got a few minutes left. Perhaps I could ask all of you, as you say, things are moving, there are very exciting developments. However, the scale of the challenge requires a great deal more investment than is currently flowing into it. What do you all see as being the game changers to really move the needle and get that capital flowing into decarbonisation? Let's go back to Eric.
Yeah, I mean, I don't know whether you call this a game changer, but I think both Tony and Moon have said it's about leadership. And I have to say that, leadership in Asia, well, on the bright side is, as Moon said very clearly, once the boss says something needs to be done, it gets done. But I have to say the leadership, and here I include governments, have been kind of shy in committing to carbon neutrality and so on. But as Tony pointed out, that in the last couple of years, that has changed, and we have seen commitment to carbon neutrality in Hong Kong. The Hong Kong government committed to 2050, by the way. And I think we need the leadership to sort of in the governments to step out and say, I'm committing to carbon neutrality and do more than what they're doing today. I think today a lot of things are being done on what I call the supply side. I mean, as an investor, you get incentives and policies and whatever. But I think it'll be good that the government leaders think about the demand side, which is market creation. I think as a business person before, I know that if you have a market, there will be people that will participate, and it's not about giving money to folks. It's about how do you create a market, and I believe governments in Asia have that capability. I have to say, given the staff, that they can create markets for carbon-less products, and therefore, and I believe this would be a game changer in scaling up. Again, a word that I borrow from Tony, because at the end of the day, innovation needs to be scaled up to make an impact.
Yeah. Moon, you've had many years in the investment business. We've only got a minute, I'm afraid, for you, but have you got any thoughts to add?
Sure. I mean, I absolutely agree with Eric that basically policy is the game changer. I mean, look at just U.S. Inflation Reduction Act and European Green Deal, right? It completely changed the roadmap for the coming 10 years. But more on the technical side, especially since my chapter is also more technical, the game-changing technologies I like are actually the ones that really bring fundamentally deep decarbonization to industries, especially those that are traditionally considered as hard to abate, right? So one thing that I sort of didn't get to mention about sequestration is there's a little part of my chapter that was dedicated to what I call, or the industry calls, carbon transformation. So think of carbon to X, carbon to value, that radically decarbonize supply chain and the source of Scope 3 emissions, and not just capturing post-emission and then storing it somewhere. So the examples could be turning CO2 into commodity chemicals, to synthetic fuels, specialty chemicals, and even some more durable forms of carbon, such as carbon nanotubes, graphene, and even diamonds, right? And then there are sort of other upcoming technologies that are also, again, decarbonization rather than just sequestration, and then kind of like net negating the emission that's already happened, right? So those could be electrification of steel production, and carbon negative cement, etc. So I mean, I could go on, but I'll stop right there.
Okay, thank you. My brain is aching trying to process everything that you just said. So we're almost at the end of our time. I apologize to those of you who did send me questions that I haven't had time to get to them. You should have sent them to me earlier on in our hour, and I definitely would have. Thank you so much to the panelists for a really, really excellent top discussion. And now I'd like to hand over to Andrew Wells from the Commonwealth Chamber to wrap things up for us.
Thank you very much, Alexandra, and thanks to all of our intimidatingly smart panelists, as well, of course, as to the participants. It's been an honor and I must say an intellectual treat for the Commonwealth Chamber of Commerce, Hong Kong, to help to facilitate this webinar and to highlight the book, Decarbonizing Asia. Personally, it's very difficult to pick up on just a few points in such a rich smorgasbord of ideas, but I found it amazing that, as Tony was saying, no such book had been attempted before. So the scale of the ground covered, both literally, geographically, even covering the Middle East, and technically very tremendous, and obviously a marvelous and timely project. Eric's focus on the crucial importance of cities and smart buildings in decarbonizing Asia activities was just the beginning of a huge discussion. I personally would have loved to pursue the biodiversity issue a little bit more, so there's another event in store, perhaps. And Moon's insights into methods of carbon capture projects, while leaving laymen such as myself a little intellectually challenged, was especially welcome and important. Alexandra, thanks as always for being a great moderator, and the CCCHK really looks forward to continuing to work with the FRSG in its groundbreaking efforts to look for not only the problems, but also the opportunities and ways to benefit from the solutions to the issues we've been discussing today. Thank you all very much indeed.